Hi everybody, that's March 28, 2025, Friday, and today we're gonna be looking for the model for today's date. So this is the monthly time frame. I want you to see this consequent encroachment, keep that in mind. And then down to weekly time frame. This is how it looks on the weekly. Rejection from volume imbalance. You can see previous week reading bias for the week. Was the idea coming to this volume imbalance. And also, I believe I mentioned this flat candle liquidity. Let's go down to daily time frame. This is how it looks on daily, 4-hour time frame, hourly, 15 minutes. Stay until the very end because I'm gonna teach you something today very important. You wanna see the midnight opening price, then this is the down to 5 minutes. This is how it looks on 5. All of those close candles, they take this relative equal highs, which is buy side liquidity. So buy side liquidity was taken, and what does it mean? Once this opening price is violated, you have bearish order block. And where would be the entry? The easiest one is 3 ticks below this opening price, and another one is at 50% of the order block, which would be here, or at the beginning of this fair value gap. To be honest, 50% is more than enough. So this is how it looks. Now we want to take standard deviations from lowest point to highest and make projection to the downside to see what should we be targeting. Look, and I want you to explain something like once we reach 2 standard deviation and you think, oh, we stopped, we might reverse or something, or even in this consolidation, unless we reach 4 standard deviation, you have bias short, because on the lower time frame we have, on the weekly time frame we have that flat candle liquidity, and all of those up movements you could be shorting, and I'm going to show you all of those opportunities. For minutes time frames, look on that order block. You could enter like here, here, or here, like you had plenty of time to enter. And then we went to 2 standard deviation, tested it from the other side, and let's go down to 1 minute time frame. Let's stay on 2. I want to show you something. Look, again, what do we have here? This high and that high. Those highs are relative, so we have relative equal highs, and all of those up close candles short the block, and what? And whatever price coming back inside this bearish order block, you can be shorting and go in the direction towards 4 standard deviations, because since the 5-minute order block wasn't delivered yet, bias still short, so any entry short is great in the direction towards those 4 standard deviation. And what did they teach you for the last 4 days or something? Once you have even number like here, 19,400, you want to get out 10 points before that. And this is how it looks, the execution. Here's entry and here's exit. Beautiful, isn't it? Yes, price went all the way to 2 standard deviation, but it's not guaranteed, and you want to be safe, especially if you work with prop firm and you have trailing drawdown, okay? And yeah, this is pretty much it in terms of execution, and let me show you how much it will be in terms of risk reward if you go short here all the way to 2 standard deviation and 4 standard deviation. This is 2 standard deviation. Let's make it like this. That's 124.65, and this is if you go 4 standard deviation, it's 128.5. Of course, not every day you're gonna have moves like this, but what I'm trying to say, that's possible. And in order to have moves like this, you have to study them. Otherwise, you will be hunting for those 10-15 handles moves, and I don't have anything against those moves, but it's like much more pleasurable and fun to get those moves, right? So guys, hopefully you found this insightful, and until I talk to you next time, you all the best and take care. Wow, what you just learned here could change the whole approach to trading. Are you ready to take the next step? Your next big insight is just 1 click away.